Welcome to our 4-3 lecture today, where we'll be talking about our financial statements for a departmentalized merchandising business. A lot of these are going to be review. It's just that some of them need to be tweaked a little bit so that we are able to do them as a departmentalized business. So let's look at our first one that we'll be doing is our income statement. Remember that an income statement is simply a financial statement showing the revenue and expenses for a fiscal period. When we're doing a departmentalized statement, what we'll be having is 5 columns. 2 of them are going to show departmental data, and 3 of them are going to be for the company amounts, and then also for doing vertical analysis ratios. The amounts for completing our income statement are going to come from our adjusted trial balance, so that's what we did in 4.1. And we're also going to need the information from our departmental margin statement, which we completed in 4.2. Vertical analysis ratios, of course, are calculated by dividing each amount by our company net sales. So that's something that we've done before, so that shouldn't be too new for us. So here's just an example of what our income statement looks like for departmentalized data. Here were the 2 that I were mentioning, the 2 departmental datas. We collect this information. This is coming from your departmentalized statement. It'll show up here from our departmental margin statement. These 2, to add the grills and furniture together, that's where we end up with our company amount. So we just take each of those, end up with a total. And then the indirect expenses, those are coming from our adjusted trial balance. Just as a reminder, an indirect expense is one that cannot be tied to a specific department. So all of these are spread out over each department, so we don't have them up here in our departmental data. And then the following stuff, income taxes and net income, of course, is calculated after we have completed our income before income taxes. And then again, our vertical analysis ratios here, each one of the amounts in the 4th column get divided by our net sales amount, which is the 100%. So that's our first financial statement. Our second one is the statement of stockholders' equity. The statement of stockholders' equity is, of course, the statement that shows changes in our ownership for a fiscal period. And that information, again, is also going to come from our prior year's statement of stockholders' equity, the income statement, which is why we have to do the income statement first. And then we also will have information coming from our adjusted trial balance. The statement of stockholders' equity, again, has 2 major sections. The first one is capital stock. Capital stock, of course, is the total shares of ownership in our corporation. And then the retained earnings are the amounts that have been earned by a corporation, and we have not yet distributed those to our stockholders, hence the word retained, meaning we have kept those earnings with ourselves. Net income, remember, is going to increase our retained earnings for a corporation. A corporation sometimes retains earnings for business expansion, and sometimes they may distribute some of their income to stockholders' equity as a return on their investment. Remember, that is what we refer to as dividends. So dividends also occurs in our statement of stockholders' equity. So here's what that looks like. We, of course, have our heading as normal. Our capital stock section comes first. So we have our par value is always listed, what that is. We have our balance of stock at the beginning of the year. We say how many shares have been issued because not always is the par value $1. So sometimes the par value might be 10 or 5 or 25. So we always list the number of shares that were issued. Next comes how many we issued during the year. We issued 5,000 more shares, and then that will give us our balance of capital stock on the last day of the year. Retained earnings is next. We start with our beginning balance. That is information could come from your previous stockholders' equity statement, or it would be on your adjusted trial balance as well. And then we have our net income for the year. This is where we will have to have completed our net income statement first. So we did that already. We take out our dividends. Again, that's coming from our adjusted trial balance. And then we'll get our net increase, which obviously will give us our balance at the end of the year. And then we add those 2 together for our total stockholders' equity as of the last day of the fiscal period. Our third financial statement we do is our balance sheet. A balance sheet, of course, is the report of assets, liabilities, and owner's equity on a specific date. So just remember, balance sheet is always on a specific date. It's the snapshot one. The data used to prepare the asset and liability section comes from our adjusted trial balance. Just a few things to remember about your balance sheet. Typically, assets are broken down into two categories. We have current assets and plant assets. Current assets would be used up within 1 year. Plant assets are usually held for more than a year. Some of the assets have contra accounts. Contra accounts are nothing new to us. The ones that we'll be working with, of course, are accounts receivable and then office and store equipment. And just as a reminder that the balance of the contra account gets subtracted from our asset account, and that gives us our book value or the up-to-date value in that asset account. After assets comes our liabilities. Liabilities are usually divided into two categories. Current liabilities, meaning we would need to pay those off within a year, and long-term liabilities would be debt that we have for longer than a year. And then our last section in the balance sheet is our stockholders' equity section. This information that we need to prepare this is going to come from our completed statement of stockholders' equity. Our total amounts we're looking for are our total capital stock and our total retained earnings. Remember that the detailed sections of this are what we just completed in doing the statement of stockholders' equity, so there's no need to repeat that. We just need total amounts here for capital stock and retained earnings so that we can complete the balance sheet. And then oftentimes you'll do a vertical analysis ratio by dividing each of the selected amounts, which are usually big ones like current liabilities, current assets, and dividing each of those by your total assets. So here's our example of our balance sheet. Again, here's our asset section and our liability section. As you can see, if there is an account that has a contra account, they're going to go in the first column so that we know that we need to do a calculation here to get our updated book value. So you can see we have all of our current assets listed and then our total. Our plant assets, both of those each have contra accounts, so their balance in the account minus the contra account gets us our book value, and then those two added together are our plant assets. Total of those two brings us to our total assets. We wouldn't double underline here until we have verified that our liabilities and stockholders' equity section equal that. So you can see here that we have our liabilities listed. Notice that because it doesn't appear that we have any long-term liabilities, we just have our current ones listed. We have a total here for liabilities. And then this is what I was talking about for the stockholders' equity section. We just list totals here. There's no need to go into detail because that information is already on our statement of stockholders' equity. So once we have those two, we add them together and then just note that the assets and the liability and stockholders' equity equal each other. That's why they're listed at 100%. And then the numbers are just divided by those to get your current or your vertical analysis ratios. Our last statement is our statement of cash flow. Remember that your income statement, statement of stockholders' equity, and your balance sheet are all prepared using what we call the accrual basis of accounting. So accrual means that revenue is recorded when it's earned and expenses are recorded when they are incurred, not necessarily when cash exchanges hands. However, we learned in the end of Accounting 1 how important it is to also make sure that we have an idea of how a business receives and spends cash. That's called the cash basis of accounting. So remember that cash receipts and cash payments are called cash flows. And so the financial statement that summarizes those cash receipts for different business activities is called the statement of cash flow. The cash flow statement gets divided into 3 sections. We have operating activities where we have cash receipts and payments that we need to make to operate on a day-to-day basis. We call those examples are receiving cash from our customers, so cash receipts from sales, any sort of purchasing of merchandise, and then any sort of paying of expenses, salary expense, rent expense, insurance expense, any of those would be examples of operating activities. The second section is the investing activities. That's where we have cash receipts and payments that involve the sale or purchase of an asset. that's used to earn revenue. So anytime we're looking at long-term assets here, plant assets, so typically equipment and buildings and land. So like I said, the sale and purchase of plant assets would be an example. And then our third section is the cash receipts and payments that involve either debt or equity transactions. We refer to those as our financing activities. Examples of those include borrowing money from our creditors or paying back our creditors, and then either selling stock, which would be the issuance of stock, we receive money for that, or paying dividends, which would be a payment of that. So those are our four statements. Just a reminder: income statement, statement of stockholders' equity, a balance sheet, and then also our statement of cash flows. So here's our statement of cash flows, what it looks like. We have our operating activities, we have our cash receipts coming in, positive amount, and then anytime we have cash payments to show that they are money that is outgoing, we put into our parentheses. That is a total, and then remember the difference between those two, which is what we call the net cash provided or used, goes in the third column. We then have our second activity, which is investing activities. That's the sale or purchase of plant assets. And then our third one is our financing activities. And then obviously we have our net change in cash for the period. We need to have our cash balance as of the beginning. You can find that either on, or that information would have to be given to you because I don't think that we would have that information readily available. And then one thing to check out is that this cash balance right here, that is the end, that should be the same balance that's on your adjusted trial balance. If it's not, that means that you have an error somewhere, probably in your calculation. So just check that out. So our next thing to head over and do is our 4-3 work together. So I will meet you over there for those videos.